Okay guys, this is WAVETRACER community. Don't forget to follow our channel. Our YouTube channel is a brand new channel, WAVETRACER community. Okay, this is an analytic video for this weekend. Bad enough, I think that we have already started our bearish movement around here, and we expect our first take profit to be somewhere around here, and our second take profit to be somewhere around here. So I think that we cannot surpass this level here, as price will continue to drop until somewhere around here, or even extremely down there. Okay, so we are going to start with our analysis. We're going to start with our analysis, and I have to add some. Yeah, we are adding. Okay, so what in our wave analysis, we in a Elliot wave theory, we have 5 impulsive waves. This is the first impulsive wave. We have our first corrective wave, which is the wave 2. We then have our second impulsive wave, which is the wave 3, and we also have our second corrective wave, which is wave 4, and we have our final wave 5 before we initiate a reversal. So as you can see from this diagram, we expect between these 3 impulsive waves, there is one impulsive wave which will be longer compared to the other impulsive waves. As you can see here, that wave 3 is longer compared to these other waves. Okay, so what we then expect after this is a in a higher time frame, it is a complete, it is in a higher time frame, it is a complete bullish move. So all of this in a time frame, in a higher time frame, can be this candle. Only this candle can signify all of this move. So we then expect a reversal, a short reversal before trend continuation. For example, here, if you look correctly inside here, I think this is part of our corrective wave. So here we have our first wave, we have our second wave, our third wave, we have all of this as our fourth wave, and this is the fifth wave, and then we had our correction. So all of this is a correction. So what we expect from here is a short correction before trend continuation. So this is our short correction, and then we expect a trend continuation. Okay. Okay, so the problem is there are uncertainties between the formation of the waves. I will start with the formation of the impulsive wave, because all of this is a single impulsive wave in a higher time frame, and all of this is a simple corrective wave. So this might be a bullish candle, and all of this might just be a doji candle, and all of this another bullish candle. And for example, in this area, we have all of this as an impulsive wave. In the next time frame, which will be the weekly time frame, all of this will be represented by a single candle, and in a lower time frame we might have all of these wave counts, and whatever it is happening here, it signifies this reversal, and then whatever is going on here signifies this another impulsive wave. So the problem arises only we don't know the exact location of the elongated wave, but most of the time it is the third wave, and also the fifth wave can be the elongated wave. It is a must to have an elongated wave within the wave sequence. And also another problem is that we have variations in terms of this corrective wave. sometimes it can present as an ABC, but sometimes it can present as double presentation, ABC, ABC. It can present as an ABC, 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 ABC. So it might present as an ABC, ABC, and very many other trendy presentations. So right to the business, you have to know how to spot the first wave. So the easiest way to spot the first wave is that we have to look at the price action, and we can see here that we had this move. This, let's say that the price was making lower lows, higher lows, lower low, and right now it made this. This is a higher low, but it failed to create another lower low. So right here is where we have to locate our first wave. So the first wave is usually the breaker wave after the formation of this failed to break. So this is our first wave. As you can see, all of this is our first wave. According to textbook rules, it should not, this price was not supposed to break below, but the market breaks. So this is our first wave, and whatever is going on here this is our second wave. All of this is our third wave. This is our fourth wave, and this is our fifth wave. We expect the fifth wave to be almost of the same length compared to the first wave. As you can see here, we only segregated the first wave into only this candle and the top. But when we go to the higher time frame, we might find that both of these candles belong to the same candle group. So it is the same as saying all of this in the first wave. And then when we place this, you can see here that exactly where the price reversed is where we have our fifth wave top. So we expect a price reversal. So in the short terms, this is our first wave, this is our second wave, all of this is our third wave, this is our fourth wave, and this is our fifth wave. So as I said before, that we expect a reversal to occur at this area. We expect a reversal, and our reversal has our first take profit to somewhere around here, and we have our second take profit to somewhere around there. Okay, so after knowing our goals, that we need to find a wave breaker and calibrate the wave 5 position, we now have to look for an entry. So to find an entry, we only have to go to the lower time frame. Okay, we can see here that we had our what is this? This is a lower high, lower low, lower high, but price failed to create another lower low. So we can then go to the higher time frame, okay, to see the location of the wave breaker. So from this presentation, it is quite tricky. You can see here that it is quite tricky that to see the breaker, because all of these were failed breaks. You can see that the price always comes and rejects around this zone, so it is a false break. Okay, but I can take, what if I take this as my first wave, and that will be my second wave, and exactly right where the price is. Okay, I'll have the first wave, the second wave somewhere around here inside. We have our third wave, we have this as our fourth wave, and all of this as our elongated fifth wave. So it is quite tricky, but when we go to the lower time frame, we might see all the patterns clearly. Okay, so as I said, that we have sometimes we have different presentations of the Elliott waves. Sometimes all of this might be the first wave, but sometimes half. We have to we call it the half contract between this, which is somewhere around this rejection. So somewhere around here, this is our first wave, okay, and we can have our second wave. All of this, okay, we have our first wave. Our second wave is somewhere in between there. This is the third wave. All of this is the fourth wave, which is the major or the long consolidation. So all of this is the fifth wave. Okay. Graphically, you can see that we have this as the first wave. Okay. First wave, second somewhere in there, third wave, fourth wave, and all of this is our fifth wave. So, which is some kind of a confirmation about the potential reversal. On my next videos, I will explain how we can integrate various Elliott wave theories into finding the exact point of turn, or an anchor point as this point. So I am quite sure that we are going to have a reversal around there. We expect a bearish move, so I'm going into a further lower time frame to facilitate whether I can get a good entry. Okay, so as usual, I expect to have my first wave around here. Okay, this is complete. The wave is already complete, and so what you can expect from this move. It's too bad that we had we had a late late session. Okay, so for example, we can see that we have this shoulder here, which is equivalent to whatever has happened there, but there is a technique called the tracing technique. So by using the tracing technique, we might not precisely enter at the preferred price, but we are going to enter at somewhere higher, which is this price. Okay. Also, in finding an appropriate stop loss, we might also trace. So somewhere above there is feasible. I'm going to explain about tracing essentials and the rest of the stuff on my next videos. So kindly subscribe to our YouTube channel, and probably you can also subscribe to our Telegram channel, WAVETRACER community. Okay, so we have this 1:12 trade with our first take profit to 1:7 and 1:12. Okay, 1:7. So we have 1:7. 1:12. Okay, so this is how we use the Elliott wave technique